Hello, I'm Charlie Blomme. I began my insurance career in the fall of 1974. And in 1975, my first full year in the business, I became a member of NAIFA. And I've been a member of NAIFA every year since then. I'm a past president of my local association in Minneapolis, Minnesota. In 1981, I made a career decision. That decision was to specialize in the marketing of individual disability insurance. So since 1981, I have been in the wholesale or brokerage side of the business, working with agents and helping them meet the income replacement needs of their clients should their client become sick or hurt and suffer a loss of income.
Hi, I'm Corey Anderson. I'm the current NAIFA Minneapolis president, current NAIFA National YAT Subcommittee chair, been a member of NAIFA since 2000, and I got started in the business in January of 2000. I first started in personal production, moved into the brokerage world, specializing in disability insurance in March of that year. And since June of 2003, I've been working on a split case basis with other insurance professionals, helping them sell disability insurance, as well as some long-term care and life insurance. Over 80% of my production is individual disability insurance. The point of today's presentation is actually a joint venture between NAIFA as well as the International Disability Society, which I'm a proud member of.
I want to tell you that Corey and I have only one reason for us to be with you today. That reason? To help you sell more disability insurance. In a moment, we will begin with the first step in the sales process, prospecting. Much of what we present may be information you already know. However, today is not about knowledge or information. It's about action. It's about getting you to take action. The reason that only 40% of Americans have a disability insurance policy is because of producers like Corey or myself or you not discussing the consequences a person will suffer should that person become sick or hurt and suffer a loss of income. As I shared with you earlier, I have worked with producers since 1981, and I have learned this to be true. Producers do not sell what they do not own. It's simple. If you own it yourself, you'll sell it. If you don't own it, you won't sell it. And know this, it is better to have disability insurance that you do not need than to need disability insurance that you do not have.
We have an unusual goal today. We want to make you feel uncomfortable. That doesn't mean we want to embarrass you or offend you or otherwise work with you in any manner other than professionally. But just as you must make your client uncomfortable to get them to do what they otherwise would not do, we're hoping to make you uncomfortable today so that you will do what you might otherwise not do. If you're not uncomfortable, we're not giving you our best effort.
We will begin our action steps by each of us filling out a prospecting worksheet, which is included in your handouts. Your worksheet is for your eyes only, and I cannot emphasize enough that this is the critical first step, because if you do not have a prospect, then you are not in business. I will be showing you 3 slides. Each slide has 2 or 3 questions to identify a type of prospect. For each question, I will give you some time to write in the names of 1 or 2 prospects and their telephone numbers. Let's begin. The first question on your prospecting worksheet is, to whom was your best life insurance sale in the past 2 months? With which 2 clients do you have the closest personal relationships? Who do you know that is successful today? Who do you know today that is most likely to be highly successful 5 years from now? Who have you sold disability insurance to that you have not talked to in the past 3 years? Who do you know that's a successful business owner? Who do you know that works for the major employers in your area? Thanks for answering these questions, because now you have some prospects. You are now in business. You may have one more prospect you need to add to your prospecting list, and that is you if you do not have disability insurance or you have not reviewed your plan for 2 to 3 years. Because remember, we do not sell what we do not own. Just a quick note, please keep those worksheets because we'll be referencing them later. As we are about to explore how to create the need for income replacement insurance, please be aware that selling disability insurance is an emotional sale, and that there is power in sharing a real and true story with your prospect so that your prospect can feel the value of having disability insurance when someone has an accident or a sickness that causes a loss of income. If you do not have a personal real-life story to share, then an excellent resource to help you find a story is the Life and Health Insurance Foundation for Education, or LIFE, available at www.lifehappens.org. Let's look at the real-life story of Jerry Sullivan.
I don't remember much from the hospital. It's like you're in a dream. And ever know when you're kind of running away from something and it's going to try to almost catch you and you just wake up? Envision never being able to wake up.
Jerry was diagnosed with a tumor on his optic nerve, went in for surgery. It turned out to be an aneurysm.
Jerry then suffered a stroke, and a couple of strokes, as a matter of fact, which resulted in his brain swelling and emergency surgery to remove some of the brain tissue.
And they said to me, if he survives this next 48 hours, we don't know if he's going to be able to speak or if he'll understand you. You may be talking gibberish to him, and we don't know if he's going to be paralyzed on one side.
Jerry was one of 2 principals in a business. Jerry's attitude always was one of being very responsible, protecting your family, your business, the things that are important to you.
I think we were the typical middle-class family with Jerry working full-time, providing, taking care of the bills, doing all the investments, and I stayed home and raised my family for 13 years and then went back to work part-time. This disability insurance really has meant a great deal to our family.
My ex-partner and I, we looked at that and said, it's a cost, but it's very important to have that.
I'm standing there, they're already in the
When
box.
Jerry's injury happened, I didn't think he was going to be out of work that long. I mean, I kept thinking this is going to get better really quick, and it hasn't gone back completely to the way we were, and it never will.
You can see a person in a wheelchair and you can look at him and say, oh, he's got people look at me because I can talk and walk and run and hey, he's okay.
Jerry will never have the job, the position that he had pre-disability. He got in his car and was out on the road days at a time, traveling tens of thousands of miles a year, visiting customers. His mental capacity will never allow for that.
Well, he has regained a lot. I mean, from the days in the beginning when he couldn't bathe himself, he couldn't shave, he couldn't eat, he didn't know how to feed himself. He had to learn all that over again.
One little thing will take me more hours than you'd want to dedicate to it. And me, it's hard to explain to my wife when she has a conversation with, don't forget, when you go, you got to do the dishes here and go down and do, and just to be able to do 2 out of those 3, or to me inside, it's like, yes, I was able to do, must be peanuts to most people. To me, wow, yes, I was able to do that. Yes, I was able to do this.
The insurance allows Jerry to maintain the lifestyle that he had before the disability. He's able to live in his home. His children are able to continue in their activities and be in college. It means that life goes on for Jerry and he gets a paycheck
And so many times I say, what must it be like for a family that doesn't have this kind of coverage? I mean, what do you do when all of a sudden your main income is not there anymore?
But we still got trophies.
We love being together. It has just been I want to say a gift, but I can't thank myself enough when we were looking at all of these ifs, ands, or buts, and wow, how I'll never forget signing that thing and how phenomenal that has been.
Welcome back from watching the Jerry Sullivan real life story. Hopefully, this story demonstrated to you the value of sharing a story with your prospect. Let's now move on and have Corey share with us some facts and thoughts on the need for disability insurance.
Let's discuss the shocking need for disability insurance. Prior to coming today, you were asked to either bring a copy of your own disability policy or a copy of a family photo. So please pull that out now and put that in front of you. In today's packet is a sample individual policy with a family photo on the front of it. Please place that in front of you as well, as we're going to be reviewing both of these. Let's talk now about the major causes of disability. I'm going to read some causes of disability. Think about people you know who have one of these disabilities. Spinal cord injury, arthritis, multiple sclerosis, Parkinson's disease, blindness, hearing loss, amputation, cancer, diabetes, stroke, heart attack. Could you become the victim of a disability or injury or illness? What's your plan to meet your financial obligations if you suffer a long-term disability? This chart shows that far more people are living and not dying today following a disability condition that in the past would have killed them. This is due to advances in medicine. Think of how many people you know that have had a heart attack and passed away versus have had a heart attack and lived. You used to hear of many people passing away from heart attacks. Not very often these days. The odds of disability. Therefore, the probability of living with a disability is rising for every age group. The question is, if you become disabled, what happens to your quality of life? What's the alternative? Think of if you were 40 years old, married, 2 children, had a $75,000 household income, and you owned nothing but Social Security disability insurance. We looked this up on the Social Security disability website, and if you became disabled, your monthly benefit would be $1,991 per month. Your child, for that child, you get $1,544 per month. Your spouse caring for your child, $1,504 per month. Your spouse at normal retirement age, $2,006. But the family maximum you'd receive is $3,511. If this family owned an individual disability policy, their household income, assuming a 60% replacement without Social Security offset, would have received $87,000 per year between Social Security disability and the disability policy. Higher income is needed because your living costs rise due to disability. You still have a car, you still have a home, you still have education for your children. Also, what about health insurance? Many people don't realize that if you're sick or hurt and you're no longer an employee of your company, what happens to your health insurance costs? What's the cost of a bad decision? The alternative to a disability policy is having a fundraiser. Everybody has an income protection policy. Is yours the insurance company's dollars, or is yours a fundraiser?
Let's now take a moment to summarize the highlights of what we have covered so far. We have shared with you that if you personally own disability insurance, then you will sell it. We have shared with you that you must have a prospect to tell your story, or you're out of business. We have shared with you facts regarding the need for disability insurance. And we have shared with you the Jerry Sullivan story so that you can feel the financial consequences of owning disability insurance. We'll now turn our attention to scheduling the DI conversation. The first step for the DI conversation is to make the call to schedule the appointment. Corey, maybe you could share with us what you do in preparing to schedule a DI conversation with one of your prospects.
Before I make the call, I remember what's the purpose of the call. The point is keep the purpose of the call, because that is the purpose of the call. And the purpose of the call is to schedule the appointment. So first I remember what is the purpose of my call, that is to schedule the appointment. Then I think about something I appreciate. Typically, when I'm making dials, I look out the window, I look at the construction going on around my office, and I appreciate something about the people outside. So I'm smiling and dialing, and then I pick up the phone to call them.
So this is the smile and dial time.
Smile and dial.
Okay. We are now going to talk about planning the phone call. Please grab your prospecting worksheet and put it in front of you. Our next step is to identify the type of prospect you will be calling as one of the following. Here's the first type of prospect. It's a client or qualified prospect. This is where the client knows you and you know something about the client.
Let's try an example of this. Ring, 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 ring.
Hello?
Hi, Charlie. Corey Anderson calling. Did I catch you at a good time?
Yeah, I'm good, Corey. How are you?
I'm doing great. It's a beautiful day in here in Minnesota, and I woke up and see the sun shining, so it's a great day. Purpose of my call, actually, is to set up a time for us to get together. How about next Wednesday or Thursday to review your income protection planning needs? Would you prefer 7 or 8 a.m.?
Hey, let's do Wednesday, Corey. I haven't seen you in a while, and it'll be good to see you.
Wonderful. Looking forward to it. I'll see you at 7 a.m. over at Good Day Cafe. Have a great week.
Thank you. Bye-bye.
Bye.
The next prospect call is the referral prospect call. This is where the prospect does not know you, but the prospect knows your referral.
Let's try an example of this. Ring, 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 ring.
Hello?
Hi, Charlie. This is Corey Anderson calling. Did I catch you at a good time?
Yeah, I'm okay. Who are you?
Well, the purpose of my call actually is I was recommended to you by Tom Curry. He said you'd be a good person to talk with regarding your income protection planning needs, and wanted to see if you and I could get together next Wednesday or Thursday at 7 or 8 a.m. over at Good Day Cafe. Would that work for you?
Yeah, Tom's a good guy, and yeah, let's do it. I'm willing to get together with you, yeah.
Wonderful. I'm looking forward to it. Let's do next Wednesday at 7 a.m. if that works.
Thank you. We'll see you then.
Perfect. Have a great week.
Bye-bye.
Bye.
The third prospect call is the cold prospect call. This is where the prospect does not know you, and you do not know the prospect.
Let's try an example of this, Charlie. Ring, 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 ring.
Hello?
Hi, Charlie. This is Corey Anderson calling. Did I catch you at a good time?
Yeah, Corey, I'm not sure who you are.
Well, actually, the purpose of my call is to review your income protection planning needs. I work with a lot of locksmiths in the area and want to see if you and I could get together next Wednesday or Thursday at 7 or 8 a.m. over at the Good Day Cafe. Does that work for you?
So you work with some other locksmiths?
Yeah, I work with other locksmiths in the area and help them with their income protection planning needs, so I figured I'd give you a call and see if I could help you out as well.
Well, yeah, let's do it. Since you have some experience with working with other locksmiths, let's get together.
Wonderful. Would you prefer Wednesday or Thursday at 7?
Let's do Thursday at 7, please.
Perfect. I'll see you over at Good Day Cafe, and have a great week.
Thank you. Bye-bye.
Bye.
Now, please take the time to write an appropriate greeting for one of your prospects. Remember, it's important to have a compelling reason for that prospect to want to meet with you. An example would be the slide showing some sample language for calling a prospect that is a business owner. After you've written your greeting, please pair up and practice your greeting. Corey and I just demonstrated that there are 3 different types of calls. But we all know that it does not go that easy or that smoothly. Prospects do have objections. So Corey and I will role play how to handle some of the objections.
Ring, ring.
Hello?
Hi, Charlie. Corey Anderson calling. Did I catch you at a good time?
Yeah, I'm okay.
Purpose of my call is actually to set up a time for you and I to get together to review your income protection planning needs. Does next Wednesday or Thursday at 7 a.m. work for you?
You know, Corey, I already have a plan, so I don't know if there's any purpose in us getting together.
Oh, Charlie, that's actually wonderful that you already have a plan. I have numerous people that I've met through the years that have already had a plan prior to me meeting them, and we reviewed the plan. A lot of times there's different gaps within it. And when was the last time you reviewed that plan?
Oh, wow, that's a good question. It could be at least 3 or 4 years.
Well, how about we get together then next Wednesday or Thursday at 7 a.m. and review that plan, and if you bring it with you.
Yeah, let's do that. Let's do Thursday, and I'll bring my plan along.
Perfect. Does Good Day Cafe work?
Yeah, I like that place. Let's do it there.
We'll see you at 7 o'clock Thursday. Take care.
All right, thanks. Goodbye.
You're welcome. Bye. Ring, ring.
Hello?
Hi, Charlie. Corey Anderson calling. Did I catch you at a good time?
Yeah, I'm okay.
The purpose of my call is actually to review your income protection planning needs and want to see if we could set up a time to meet at 7 or 8 a.m. next Wednesday or Thursday.
You know, Corey, I'm really busy. I just don't have time to get together.
Charlie, I can appreciate that. A lot of my clients I meet with don't have a lot of time. What about, do you stop and get coffee by chance on the way into the office?
You know what? I love that coffee in the morning.
What about meeting at Caribou at 7 a.m. Next Wednesday or Thursday on your way in?
You know what? Yeah. Are you going to buy?
It's my treat.
Okay, let's do it.
Would you prefer Wednesday or Thursday?
Thursday, please.
7 a.m. at the Caribou?
See you there.
Perfect. Take care.
Bye-bye.
Bye. Ring, ring.
Hello?
Hi, Charlie. Corey Anderson calling. Did I catch you at a good time?
Yeah, I'm okay.
Purpose of my call is to set up a time for you and I to get together next Wednesday or Thursday at 7 a.m. for some coffee to review your income protection planning needs. What does Wednesday or Thursday work good for you?
You know, Corey, I'm just really not interested. I think I'm going to pass.
Charlie, I can appreciate that, but I can't just let you off like that. I watched my mother actually go through a disability recently where she was hurt behind our boat water skiing. She had an accident at the age of 53 and hasn't been able to walk the same since. Missed many months of work, and I just can't let it go like that. What about getting together next Wednesday or Thursday at 7 a.m. to review your income protection planning needs?
You know, Corey, you make a good point. I never think this is going to happen to me, but I guess it could happen, so yeah, I'd be open to getting together.
What about Wednesday at Caribou at 7?
Let's do Wednesday at 7 at the Caribou.
Perfect. Take care.
Thank you.
You're welcome. Bye.
Bye-bye. Corey and I have just completed our role play, and now it's your turn. Please pair up and practice making the phone call and handling objections. Now that you've had the opportunity to practice with one another, it's time for you to make an actual live call to one of your prospects on your prospecting worksheet. Please be aware that you may feel a little uncomfortable during that call. But remember, you have one and only one objection, and that is to schedule the DI conversation. So grab that sheet, make that call, and good luck with the phone call.
I hope you had success scheduling an appointment during the break. Now it's time for us to load your libs for the DI conversation.
Corey, before we get into the DI conversation, I think we should talk about the 3 possible plans or policies, and we should talk about some of the characteristics of each of those 3 plans.
First one you have is you have group, then you have individual, and then you have the association plans. Let's do a quick summary of each of those.
Let's talk about the characteristics of the group disability plan. Tell me a little bit about taxability in a group plan.
Typically, plans are taxable at claim time, so that means you have to pay all the taxes on more or less the benefits. However, we're seeing more and more employee benefits producers moving over towards where they're having it so the benefits are income tax free, so you pay taxes on the premium versus the benefits.
Is that the term I hear, gross up?
Correct, yes.
Okay. And then I've heard that sometimes in a group plan there's some kind of reverse discrimination?
Yeah, you'll see in a lot of group plans there's reverse discrimination where it doesn't cover maybe bonuses or commissions or stock grants, stock options, or a lot of times even like S-Corp owners will have dividends that they pay themselves a lot of their wages through. A lot of times those aren't covered by a group plan. So the group plan maybe caps out.
Can you tell me a little bit about the provisions, like how they define total disability?
Typically, most group plans are going to have like a 2-year occupation protection, meaning if you're sick or hurt and can't do your occupation, they're going to pay you benefits for 2 years. After 2 years, if you can go do basically any occupation based on training, education, or experience, then go do it.
Okay. How about cost of living benefit?
Cost of living, think of that as inflation protection once on claim. Not very many group plans have it. There are a few out there that do, but not many have that inflation protection once on claim. So if you're on claim, you receive the same monthly maximum.
Okay. And then are there catastrophic benefits on a group plan?
There's some, you're seeing it come out more and more where they'll have maybe an ADL, which means activities of daily living. So this morning you woke up, you got transferred out of bed, got dressed, ate breakfast, used the toilet, used the shower, and had controlled bowel movements. If you can't do 2 of those 6, they pay you an additional benefit. You see that in some of them, but not a lot.
Okay. And then on a group plan, is there any offsets?
Oh yeah, there's a lot of offsets, Charlie. Some typical offsets with group plans are with Social Security disability. You also have an offset with work comp and also auto liability. So let's say you were sick or hurt from an auto accident and you had to sue for lost wages. 3 years later, you finally win that lawsuit and you get a big check in the mail. Your group disability insurance company is going to come looking for that check to offset against what they've paid out if you received any for lost wages in that lawsuit. Social Security disability is going to offset it against your group plan, and so is the work comp.
So a group plan definitely has the potential of some offsets.
Oh yeah.
And one last question, Corey, on group disability plans. How does it work if I were to terminate employment?
Typically, most group plans aren't portable, and if they are, there might be some major loopholes to those plans.
Oh, okay. Let's now talk about the characteristics of an individual disability plan. There are really 3 characteristics: renewability, the optional provisions, and the coverage details. Corey, let's start with renewability. I've heard some term non-cancelable. What does that mean?
Typically what non-cancelable means is they can never change the premium on the disability policy.
Oh, okay. How about if it's a guaranteed renewable policy?
Think of guaranteed renewable as is they can never change the definition and they can never cancel you as long as you pay the premium.
Okay. And then I've heard the term conditionally renewable.
Conditionally renewable, maybe optionally renewable. Main thing with it is you don't own that policy other than for a certain period, and at the end of that period, then you might have to have a new exam or pay some higher premiums or ...
Okay. How about, let's move on to the optional provisions. I've heard the term residual or partial.
Think of residual as if you're sick or hurt and can't do part of your job, then they're going to pay you part of the wages. Good example of this, I think, is a heart attack. You have a heart attack, you're out of work maybe 30 days. Doctor says you can go back to work now, but you can only work half time. Then what they're going to do is pay you half of your benefits. This rider is a necessity in all disability policies because more than half of all claims are what we call residual or partial claims.
So whatever your percentage loss of income is, that's the percentage of the total benefit you'd receive?
Correct, as long as it's more than a 20% loss typically, and then once it's over 80%, typically they'll pay all of the benefits.
Oh, wow, okay. And then there's a cost of living benefit?
Cost of living, yes, think of that as you add that as a rider, and it's more or less inflation protection once on claim. So if you're sick or hurt, you're receiving the benefits. After 1 year, they're going to raise the benefit by the consumer price index up to maybe a certain percentage if there's a cap on the policy. Every carrier is a little bit different on that provision, but it's a good rider to have, especially at the younger ages.
So it kind of deals with the purchasing power of the dollar.
Correct.
Okay. And then is there a catastrophic benefit on individual?
Yeah, you can add that as a rider. Typically, I think of it as the Christopher Reeve style disability. So if you have that worst case scenario, what they're going to do is pay you additional benefits. And it's typically tied to the activities of daily living like we talked about earlier, or a presumptive disability or a cognitive impairment. Presumptive disabilities like loss of sight in both eyes, or loss of hearing, or loss of speech, or loss of use of 2 limbs, irrecoverable. Then it pays you the additional benefit. Or cognitive impairment, think of like a stroke or Alzheimer's. It's more that worst case scenario than they're paying you typically up to 100% of your income.
Okay. You know, you had talked about the young person who's an up-and-comer, and it's important to have a cost of living benefit on there. What happens to them if their income continues to grow and they want to add to their plan?
That's what we call a future purchase option, or a guaranteed insurability option, or a benefit update, or something along those lines. Every carrier is a little bit different on what they call it. But my theory is you should underwrite a client once medically, and never underwrite them again medically if you can avoid it. So what this does is you buy the policy, you have that future purchase options where you can increase the policy as your income grows, and you can do that all with no medical underwriting.
So it's only subject to financial underwriting?
Correct.
Oh, that's great. Okay. Tell me a little bit about the actual coverage details. There must be some time period that has to go by before they'll give me any benefits.
Yeah, they call that the elimination period, or waiting period, or some people call it deductible period, whatever you want to call it. What that means is you have to become sick or hurt and go a certain number of days before you're eligible. If we're talking long-term disability, typically you'll see them set at a 90-day waiting period. But what that means is you actually don't get your check till 120 days into the claim, because you have to accrue benefits. So you're sick or hurt for 90 days, then you accrue benefits for 30 days, so day 120 is when they cut the first check.
So the elimination period is really like a deductible, except instead of it being a dollar amount in the deductible, it's really a time period?
Yeah, absolutely.
Oh, okay. And then how long can I get benefits if I become sick or hurt?
The benefit period on a disability policy, there's many different options. You can do 2 years, 5 years. Some carriers have 10 years, age 65, 67, 70, and some scenarios, lifetime. I typically recommend at least an age 65, but remember with this is the best policy is the one that's in force at claim time. So selling a 5-year benefit or a 2-year benefit is not a bad option, as long as it's something that they're going to keep, versus maybe getting the Cadillac and 2 years later stop paying the premium.
So my intuition would say the longer the benefit period, the more it costs?
Correct.
Okay, all right. And then, in the group plan you talked about how there were offsets. Is that true in the individual plan also?
It can be. If you're working in the blue-gray collar market, a lot of times you'll have to have some offsets. However, I'm not a fan of it if you can avoid it, meaning don't have it offset with Social Security, because if you're Social Security disabled, that means you are severely disabled and you need every dollar you can get your hands on. So I'd recommend not saving that 5 or 10% in premium and having it be all base benefit.
Okay. And then obviously what's critical is how do they define disability? What kind of definitions would there be in the individual plan?
There's a lot of options on the definition. I recommend that every client get a policy that protects their occupation for the entire benefit period. I call it own occupation if not engaged. You can have true own occupation, which is like a double dip feature. It's maybe sometimes an overkill in some scenarios, but the main thing is have them protect their occupation for the entire benefit period, because a lot of times those group plans only protect their occupation for a couple of years or maybe 5 years.
That own occupation or that double dip sounds like it's a little more liberal type of definition. Who would probably consider purchasing that rider?
Typically the clients I deal with is the ones that are doing the true own occupation rider are going to be your high-end executives or your high-end doctors that say they need the best of the best and premium is no factor in the equation.
Oh, okay. Thank you.
We've talked about group plans. We've talked about individual plans. Now let's talk about association plans. Charlie, can you tell me a little bit more about some association plans?
Well, association plans are disability plans where an association offers the plan solely to that association's members. An example would be the American Medical Association or the American Bar Association, or our own plan here right at NAIFA. There's an association plan here at NAIFA. In an association plan, the plan being offered is either a group plan or an individual plan. Typically, both plans are not offered in an association plan. The main benefit to the member of the association is that the disability plan is being offered at a premium discount. A possible shortcoming is that the association plan may have a plan design limitation. A limitation relative to how do they define total disability, maybe a limitation as to how long they cover mental and nervous, whether it be 24 months or for the length of the benefit period. Well, Corey, that completes our discussion about the 3 possible policies that a prospect may own when we meet with that prospect and have our DI conversation. Let's move on and talk about the anatomy of a DI conversation. I've always been told that there are 5 parts to the DI conversation. Those 5 facts are facts, feelings, needs, solutions, and then the close. Corey, what facts do you like to share during a DI conversation with a prospect?
Well, thanks, Charlie. Every decision in any financial plan is based on the ability to earn an income. So let's look at the 3-legged stool. One leg represents living long, one represents dying young, and the third one represents becoming ill or injured and not being able to work. If anything happens to either of the legs, any of them, then your plan fails, and each leg needs to have a plan. Without the income, the other 2 would collapse. Let's talk about the successful financial strategy and the key to the successful financial strategy. Most want to start somewhere higher up on the pyramid, but it all begins with your ability to get up and go to work each day. If you don't get up and go to work each day, how do you fund that financial plan? So where do you start? You start at the base, and you start with disability insurance or income protection. Let's talk about the fundamentals of risk management. Income is the most important asset. If you lose it, that's the highest loss in value you have on your entire risk management. If you look at a car, you have a $30,000 car, maybe it's $150 a month to insure. You have a home, maybe $250,000 home, and it's $150 a month to insure approximately. Health, maybe you have $1 million of coverage. That's anywhere from $400 to $1,000 a month for your health insurance. You have life insurance, maybe you have $500,000 of life insurance. That's anywhere from $30 to $300 a month. But your ability to get up and go to work each day, if you're 45 years old and you're earning $100,000 annually and you have 5% annual increases, that's a $3.3 million asset. Again, $3.3 million asset. How much does it cost to insure that or protect that? Approximately $220 a month approximately. So the greatest risk you have is your income. If something happens to your income, what happens? And if you look at the risk factors here we have on this slide is your car, the odds of it actually complete loss aren't very high. Home, complete loss aren't very high. Health, that varies. Life, not a lot of losses at a young age. But your ability to work, you have a 1 in 8 chance of suffering a sickness or injury that lasts 90 days or longer prior to age 65. Let's talk about sources of income. There's many different sources of income if you were to become sick or hurt and not able to work. One is savings. If you save 10% annually, 1 year of disability may wipe out 10 years of savings. Social Security. Roughly 60% of all disability claims are denied in their first year. And in fact, in 2009, it was over 70%. You could liquidate investments. Will you get the value at that time? What if you were in fall of 2008 and you had to liquidate some assets? How would that work? Loan. You could go take a loan out, but if you're sick or hurt, who's going to be offering you a loan at that time? Or family, friends, and charity. Do you have a friend, relative that would take care of you if you were sick or hurt? Do they know this? Do you have it in writing with them? We have reviewed the facts. Now let's review the feelings. Which come out in your story about you?
Corey, thanks for sharing some facts about the risk of becoming sick or hurt. The next step in the DI conversation is to share a story so the prospect can feel the value of owning an income replacement policy. Corey, with your experience, I'm sure you have a story that you share with a prospect.
Let me actually share a story with you about Joe. Joe was a litigation attorney that enjoyed playing in softball tournaments through his church on the weekends. One Sunday afternoon, he was playing first base. There was an infield hit. The ball was coming over to first base, and as he's catching it, he gets plowed over by the runner. He hits the ground, takes a little while to come to, ends up playing a little bit more softball that day. Somehow drives himself home, wakes up the next morning and just things aren't right. Starts looking into what's going on. Why is my memory a little off? Why am I not walking normally right away? Something just isn't right. Started looking into it, and turns out he had a closed head injury, a concussion that turned into actually brain damage. Today he walks normal, he talks normal, but he has a closed head injury. He will never perform as a litigation attorney again. He's still the breadwinner, though, of his family. He had a group plan and an individual plan. He still pays the mortgage. He still puts food on the table. He still pays for the health insurance. He still pays all the bills. But he isn't able to go to work each day and perform as a litigation attorney.
So where does that money come from?
Money comes from his disability policies. And you know what, Charlie, the kicker of the whole story is? You know who ran over him at first base? The pastor from the other church.
Hold on.
Yeah.
Please note the effective elements of a good story. The story has to be real, the story has to be shocking, and the story has to demonstrate the value of the product, income replacement. Now you have a few minutes to write the story of how a disability impacted you or someone close to you that you could share with a client. If you do not have a personal story, please feel free to go to www.lifehappens.org for a Life and Health Insurance Foundation for Education pre-recorded story. Let's pause here to give you the opportunity to write that personal story. Welcome back. Now it's time to talk about the third step in the DI conversation. That third step is the need, establishing the need. Corey, could you share with us how you demonstrate the need when you meet with a prospect?
I think one of the things for establishing the need is first asking some questions. So if they were sick or hurt, how would you pay your mortgage? How would you pay your car? How would you fund your retirement? Let them answer those types of questions. And there might be some uncomfortable silence when you ask the question before they are able to answer it. Sometimes you might hear, well, I got a group plan. And then that brings up a whole nother conversation. But the main thing is asking questions so they, in essence, establish the need for themselves. Don't bring the proposal to that first appointment. That's where many advisors go wrong is, I need numbers, I need illustrations. When I worked in the brokerage firm, doing illustrations day in and day out, they'd say they needed an illustration, the broker would, but they wouldn't have any of the details. And the key first is getting all the details on that person. Then the second thing is set your client up for what is the expected cost. A lot of them want to know, what is this going to cost to insure my income? And I typically say if you have no group insurance and you have no individual insurance in force currently, if you were to pay for the premiums, it would be 2 to 4% if you're a female and 1 to 3% of your gross income if you're a male. Now, if you have group insurance, those numbers can come down. And I also say it's like buying a Cadillac Escalade or buying a Geo Metro or somewhere in between. You can buy any one of those cars, and the same thing with disability insurance. You set it up how you want to have it.
So summarizing, Corey, when you're establishing the need, you use questions, and you want, through those questions, to have the prospect be concerned and be disturbed about how are they going to maintain the financial lifestyle that the family is accustomed to.
Correct.
Okay. Now that the need for income replacement insurance has been established, it now seems logical to do the last two steps, step 4 and 5 of the DI conversation, and that is to present the solution and to close. Corey, again, with your experience, you've presented many solutions and you've closed many cases. Your thoughts, please?
The solutions part, I think, is pretty easy, assuming you've done the proper steps on number 1, number 2, and number 3. And when you bring number 4, that is more or less presenting the illustration and solving those needs that they had. Now, one of it is I like to point out what are the gaps in their current plan. So how much do they have at stake? Do they have a 30, 40, or 50% gap, or 80% or higher? What is that gap? How is this individual policy going to solve that gap? And then we get into what are some of the options within the policy. And I try to boil it down to simple things, maybe relate it back to a car that they might think of, okay, a car, you need an engine, well, you need to have residual disability on the policy. Do you need some of the extras? Do you need leather? Maybe cost of living's like having the leather, etc. So then when I'm coming out there and I'm presenting the solution is I'm satisfying those needs with these solution over here, the policy, and I review that. If you do all that, it shouldn't be too hard. Then as far as doing the close is what I see a lot of advisors doing is they don't actually ask for the check, and they don't actually set up what's next in the whole process. So what does underwriting look like? Okay, well, you know what, here's the underwriting process. We have to take an application. That takes about this amount of time. Then we also need to have an exam done, maybe. Sometimes you don't need an exam these days. Financials, sometimes you need financials, sometimes you don't, setting up those expectations. And then a lot of times clients want to think through the disability insurance for a while and say, do I want to do this, or what riders do I want to do? And so what I share a story with the clients is I say, you know what, a lot of my clients don't have the final decision today if they want to move forward, or if they want the disability insurance with these specific riders, but they know they need it, and we figured out the right carrier for them. So a lot of times we're saying, why don't we start the process? And during that process of underwriting, the insurance company is determining if they want to take you on as a risk while you're deciding which options within the policy you want. So instead of waiting and putting it out 2, 4, 6 weeks down the road, is we can start that process that time. Or if they don't want to start the process today, what I say is, you know what, when would you want to make a decision on this? Should I follow up with you in a week? Is that what you want to do? Or should we set a time? How about 7 o'clock next Thursday? We'll get together and we'll come to an agreement on this and figure out what you want to do.
Okay. So summarizing it, Corey, I think what you're saying is if the need is properly established, it's really quite logical, the solution, because that solution will fill the gaps.
Absolutely.
Okay, and then I think I'm also hearing you say that it's so critical to actually ask for the order.
Yes.
It's okay to ask the person to take action, but it's so important when you ask them to take action that you do it positively and with the expectation that they will say yes.
Absolutely. I think a lot of people don't do the ASK to GET, as I was once told. If you don't ask, you're not going to get.
Corey, I have a question for you. What do you do if the prospect says no and is just not going to buy the disability insurance?
Charlie, that's a good question. What I typically do is I have them sign a liability release letter saying that they aren't going to hold me liable, and I set that up way before I started the whole conversation. I said if I present the right solutions and solve your needs and present these options and you don't execute those options, that I'm going to have you sign a form saying that I offered all this to you and you're choosing not to do that. And then I put that file, a copy of that in their file, and then I also send them a copy so they have it for their file.
So when you do that, do you ever get somebody to change their mind?
Oh yeah, a lot of people say, well, wait a minute, you mean I have to sign a release that I'm not going to hold you liable in the future? They start to think twice about it.
Well, that sounds like a good idea, but probably takes a little guts on your part to do that.
Absolutely.
Yeah. That concludes our anatomy of a DI conversation. And please remember, there are 5 parts: facts, feelings, needs, solutions, and the close. It's now time for Corey and I to conclude our time with you. We first want to thank NAIFA, as well as the International Disability Insurance Society. We also want to thank you for your time and your attentiveness. And we hope this time we spent together accomplishes Corey and my goal, which is helping you sell more disability insurance. Corey and I are confident that you will sell more disability insurance if you remember these highlights. 1, you must prospect, for with no prospect, you are out of business. 2, when you call to schedule a DI conversation, you have only one objective: to schedule the DI conversation. 3, you must have a real and true story to share with your prospect. 4, you are not alone in trying to sell more disability insurance. You have multiple resources available to you. A resource like the websites we referenced earlier. A resource that you have in one another. Please encourage one another. Please hold one another accountable for learning how to market individual disability insurance. And the last resource is a resource like Corey or myself, where you decide to establish a working relationship with somebody who specializes in the marketing of individual disability insurance. And our final note is an action step. Please take out your family photo that you brought along with you. Please turn it over. Please write the date in which you will complete a disability application on yourself. Because remember, if you do not own it, you will not sell it, and that would be losing income twice.